Hello students, how are you all? So today in our paper, the BBSC 202 Business Accounting, we're going to start a new topic, that is preparation of bank reconciliation statement, or in short the BRS. Before starting the BRS, let me clear some important points. We all know that there is an accountant who is doing all the entries in a business organization. Now, whenever he is receiving or maybe paying any cash or check, he has to record all those entries in somewhere. So the book where he is recording all those receipts and payments, we all know that is known as the cash book. So cash book is that record which is held by the business accountant within the organization. Now that business body or that company obviously has a bank account. Then what about those bank transactions? Suppose somebody is putting money in those banks. Suppose there is a customer who paid directly to the bank. Suppose I give a check to a party, then he will take the check and he will put that check in his bank after 2 weeks. And when he put the check in his bank, then his bank will collect the money from my bank. So that will take a time. But think about that. When I am paying that person a check, suppose rupees 50,000, where I will write immediately in the cash book, because I am the accountant. I gave a person rupees 50,000, then I will write that payment entry in my cash book. Then after receiving the check, that person will go away and he will pay his check on his bank after 2 or 3 days or after maybe 1 week. And after 1 week, and when he will put the check in his bank, then his bank will collect the money from my bank. So that will take a time to 7 to 9 days. So within these 7 days, if I check the balance of my cash book and the passbook, there will be a difference, because within these 7 days nothing was deducted from my bank account, because that person has not presented the check yet. So my bank has not paid the amount yet. So the amount in my bank is intact. But when I paid the check to that person, I immediately recorded in the cash book. So there is a mismatch between the balance in the cash book and the passbook. Take another example. Suppose some person on Saturday evening gave a direct check in my name in my bank account. So that will be immediately recorded. But I got the information on the after the Sunday, means the Monday or the Tuesday. So within these 24 or 48 hours, if I want to check the balance, obviously there will be mismatch, because he paid the amount directly in the bank, that is recorded in the passbook, but that was not recorded in my cash book. So there is a mismatch. So BRS is that statement which will help us to know why there is a mismatch between the cash book and between the passbook. So it's not like there is a mistake. There are some entries which are not updated so far in the cash book or in the maybe the passbook. So that is why there is some mismatch in the balances. We can see it from the point of view of the passbook, or we can see from the point of view of the cash book. Both are same. So that is actually a BRS. In the screen, it is a statement prepared by the business entity, where reconciliation or matching the bank balances as per the cash book and the passbook will go on. Then we have to find out the differences and nullify them. Now, how we can nullify? Nullify means just we will just detect the balances. Okay, these are the checks which was not clear. These are the balances. These are the payments we have not recorded. It's done. Okay, everything is fine. So things are detected. Then make it zero. So it is a statement which is prepared by the business entity. Now, so the basic thing is there, the cash book is prepared by the business and the passbook is prepared by the customer's banking transaction by the bank. So it is not the part of the accounting process or financial statement. It's not a financial statement. It is prepared at a particular date as a part of cash book. It is not mandatory to be prepared voluntarily for matching the balances of both the books. Then it can, the importance are means they bring out some errors, then detect the delay of the bank and manipulation by the accountant, and it can help you to find out the actual balance both in the cash book and in the passbook. But there are some different reasons. There will be timing. I told you that somebody not cleared the check, somebody not presented the check. It will take time. So the time factor makes the difference, or maybe some errors in the cash book. Then what are the timing difference? That check deposited but not cleared, or is a direct payment received by the bank, or there may be bank charges or interest. Bank charges means that bank will deduct some money from your account for his service. So that will be effect first in the passbook, then he will inform later. Means there will be a difference, a mismatch of balance between the passbook and the cash book if there is a bank charge. Same for the bank interest. They will put the amount in your account in the passbook, but if you are not informed, it will be a delay to record in the cash book. And there may be some other mistakes like wrong amount, the wrong casting in the cash book, or some double entry, etc. So we all know there are two kinds of balances: the debit balance or the normal or favorable balance, and there is overdraft balance. So it is either debit credit in the cash book or a debit credit in the passbook. Now there are two techniques, that is without adjusted cash book, means whatever may be the mismatch, we will write only in the BRS, and the with adjusted cash book, that is the errors of cash book are rectified in the adjusted cash book, then we can see the report. So one is just the preparation of the BRS, another is after preparing we will put those entries in the cash book also. So while preparing BRS, the change or cancellation of the differences are to be done in the book from which we have started, and keeping in mind the treatment done on the said transaction on the other book. So remember, when you are talking about a single entry, we have to look at the both sides, both in the cash book and in the passbook. It's not like that we will take the only one side of the cash book or one side of the passbook. If you are talking about the not paying the check, then what is the effect is happening in the passbook and the cash book? We have to see both the parts. Now let us take an example, a very easy example. Now in every BRS, the balances will be given either for the passbook balance or for the cash book balance. Now here we can see in the very first line, the debit balance of the cash book is given. Now first thing is, check of rupees 15,000 was deposited in bank but not cleared. Means somebody gave you the check in your bank, but it is not cleared so far. Next is, a check of rupees 12,000 was issued but not presented for payment. Means I give that example. Means you gave someone a check, but that party have not put that in their bank, so it is not deducted from your account also. Then there is bank charge. Bank has deducted the amount from the passbook. Then there is bank interest also. Means bank puts some money in your passbook, in your bank account. And the last one, a dividend. which is received by the bank from the ABC company. Means once again, you got some amount in the passbook which is not recorded in the cash book. So we have to make this in BRS. Now, you will find it difficult if you are not doing this. This is a very interesting trick to solve the BRS. If you do this thing, your sum is 95% complete. 5% remains. So this is a very interesting little trick to do a BRS. So put a T figure for CB and PB. CB means cash book and PB means passbook. Now don't look at this plus minus signs now. Just follow the start sign. Now why I have put the start sign there? Because look at the first line. If the debit balance of which book is given, we will give the start signature, the start sign beside that. So if it was the cash book, then I can put the start sign for the BB. Here it is cash book, so I put the start sign beside the CB. That is the main thing. Next, sorry. First, the first thing, check of rupees 15,000 was deposited in the bank but not cleared. Means somebody put the amount in your bank, but you are not informed. Means bank means what? The passbook means you put that figure in your passbook, but that is not recorded in the cash book. So there is a mistake. So actually it will be plus and minus. Now why it is like that? Because when they gave the amount in the bank, your passbook got increased. So that is why it's plus. But you are not informed so far, so you have not recorded in the cash book yet. That is why it is minus situation. So you are nothing but putting the situation, what happened in the entry, in the plus minus sign. Look at the second one. A check of rupees was issued but not presented for payment. Means you gave 12,000 to someone, but that is not recorded in the passbook because he had not presented in the bank. So you gave the amount. So when you gave that check to someone, you are deducting it in the cash book. That is the CB. But from passbook, it is not yet deducted. So it is plus. So minus means it's less. Plus means is higher. So because it is deducted from the CB, so it is minus, and it is not recorded in the PB, so it is the as it is, means the plus, means now the passbook is higher and the cash book is lower. Now the third one, the easy one, the bank charges rupees 150 was debited. Means from the passbook, from the bank it was deducted. So passbook it will be minus, and the cash book it will be plus. Look, the minus and the plus. Next, the bank interest of 1600 was credited to the bank account. So you got the interest. So you got some money in the passbook from the bank, but that is not recorded in the cash book. So which is the higher one now? The passbook. You got the money there. So passbook will be plus and the cash book will be minus. And the last one, a dividend means, you know the dividend, if you bought some share for the company, they will give you some amount. So that was received from bank, from ABC company in your bank. So once again, you were receiving money in the bank. So there is a plus and there is the minus. So first thing we have to do in the BRS is do this thing. This is your what is. After that, you have to give a pro forma. Now in pro forma, what you have to do, there is a second important thing. The information was given from the passbook, sorry, the cash book. You can see is there, start sign is there. When you will write these things, just you will record, or you will execute just the opposite. Think from the cash book point of view. Why? Because the start sign is there. So where you will give the start sign, your execution will start from there. So you will add these figures. So if it is minus, you will add them. If it is plus, you will less them. Because star sign means the cash book is vulnerable. So cash book is minus, means think about this is fixed. So this PV is fixed and cash book is minus, means cash book is going to down. So you have to adjust. So you have to add it back. Once again, put this PV as fixed, start sign as not fixed. So if cash book is minus, means cash book is getting down, and you have to put it back with the same level. So you have to add it back. So if there is minus, add them. If there is plus, means cash book is going higher. You have to make a same. You have to give them minus. So add all the negative figures, deduct all the plus figures. So that is the main trick of the BRS. So from all these entries, put this T format, put the plus minus sign, then do this thing. This is actually the profound. So first, the first line, then we will add these amounts and less these amounts. So from here, only one is plus, so we will less them, so it will come under the less, and four items are plus, so they will come under the add. So there is a first the amount, then there is add. We will add these all figures with this figure. Then we will less all the figure. Then the balance will be the opposite as the passbook. So if here, look at here, the balance of the cash book is given after adjustment. Whatever balance we will have the passbook balance. Now you would ask me, sir, what happen if there is passbook? Here it will be cash book. So just the opposite. If cash book is given, then the final figure will be the passbook. And if the passbook is given, the final figure will be the cash book. So very simple. Put the first balance here, add, then less, get the final amount, put just the opposite book name. If it is cash book, it's passbook here. If it is passbook, it's cash book here. So after that, there are some MCQs are there where you see bank reconciliation statement is prepared. You know the causes for the difference between obviously the cash book and the passbook. The answer B, the balance as per the bank column, the cash book and the passbook. Then the debit balance as per cash book 2000, checks deposited but not cleared 100, checks issued but not presented 150. Then there's 2150. So it's up to you. So it's your task to tell me in my next class why it is the answer D, 2150. So this is the adjustment. And there are some MCQs. There's another problem. So what I want to do is I want you all to do this thing, the illustration I gave. You first make this, then make it correct, make it verify with my answer. Then according to this format, you solve the problem. Then show me in my next class, in my next doubt clearing class, and go through these MCQs. Then I will ask you what are the logic behind the answers. So that's your assignment. So hope you've understood a bit BRS. I will upload more videos. Subscribe my channel. It will be easier for you to get notified. And we will see in the next doubt clearing class. So till then, bye-bye.